Okay, if you're expecting to see inflation going down, if you're expecting lower prices, if you're expecting to see your purchasing power coming back, I'm sorry to break it to you, but it doesn't look like it's going to be happening. Well, just of last week, the Fed made a quarter percentage rate cut for the U.S. economy, well, that's for the global economy, because the U.S. economy does a lot for the global economy. But here's the thing. The question is, what direction is the Fed taking? And what direction do we expect the Fed to be recognizing us for now? What is Powell not really likely to be telling you in the first place? What is Powell likely to be skipping in the first minute? We should try to understand that today the Fed is full of uncertainties. Like, it's not a path that it's gonna be an open path for everyone to be understanding the path of the Fed. Because if you look at the Powell's meeting that he had with the press conference, he wasn't sure. He never looked like he's sure of where the economy is gonna be heading to. He wasn't looking to a direction where we could be saying we are going to be cutting, or we're not going to be cutting. He's not, in actual sense, if you look at I'm not speaking about the body language, but if you look at the body language himself and the way he comes up. Today, he's coming up with points saying inflation is not like the real thing or the core thing that we should be looking at as a mass. We should look at unemployment. See, jumping onto uncertainty shows a move that just is full of errors. In simple terms, you try to understand, whenever you see someone who had the plan of doing something in the morning, and today he's having a plan of doing something else the next morning, that means he's just uncertain of what where he or she should be heading to. So in simple terms, I'm trying to lay a foundation of the Powell Foundation or the Fed Foundation. We should try to understand that the Fed today is not as clear where the economy is heading to. Okay, just looking at the number. Just look at the numbers. Okay, as of today, the GDP growth is expected by the end of the year to grow by almost 1.6%. Okay, by just by 1.6%. And as of today, unemployment is expected to be just by 4.5%. Okay, just by the end of the year. PCE inflation. For those who don't understand PCE inflation, that's personal consumer expenditure inflation. So we have what they call personal consumer expenditure and what they call core PCE or personal consumer inflation. The difference between the two, one excludes the core inflation excludes the volatility of the volatile food and energy prices. So it's an indicator to show how the changes in the price fluctuation of the consumer expenditure, how prices go up or prices go down. But just looking at the PCE inflation, is just going by 3.0%. Okay, get me right. The core PCE inflation, okay, the core PCE inflation is expected to end the year by 3.1%. Okay, we have to remember of all this, the Fed is having a goal of 2%, about 2% of because they need the inflation to be down by 2%. Okay, down by 2%. But here's the thing where things become kind of bizarre. Okay, we have to understand that the Fed today, as of today, is having what we'll be calling see, the main job of the Fed is to keep inflation low and well as to make sure unemployment is also low. Okay, to also determine interest rates. Am I right? I'm not sure. I'm sure of that such a kind of a point. But we should try to understand two or three things that in the same time. If you look at Jerome Powell and the ideology is exploding as of today or as of last week, we should try to understand it's full of uncertainties. Like uncertainties that we're not sure of where the US economy is heading to or where the direction is likely to be heading to. Because just look at the rate cuts that are taking place. When Powell was asked about about the stock market, because he was asked the question by one of the pressmen in the meeting. They asked him, like, what do you think of making a rate cut when the stock market is all-time high, and it's a number where today, I don't want to call it overvalued, but it's all-time high. Okay, making a rate cut a rate cut could make the market to be kind of hit up. If you think Powell minds about your stock portfolio or cares about what you're investing in, yeah, he's focused about his and their goal as the Fed, which is right actually. But the question is, do they really care or they don't? Or they are just uncertain of where the economy should be heading to or where it's likely to be heading to? We should try to understand that today and the Fed economy and the Fed statistics are kind of bizarre, like really bizarre. Something that someone could come up and be like, yeah, it's not something like someone should be like, or be saying like, we are proud of this, but we should try to understand that the Fed direction today is kind of uncertain, and this all brings us to the US dollar. Okay, if you look at the US dollar today, just look at, I always come up and I speak about the DXY. When I speak of the DXY, I mean the dollar index. When I speak of the dollar index as of today just spent over 4 months trading under 100 USD. Okay, which could be not a real point for everybody else, but this includes the US debt. Okay, the 37 trillion debt. Okay, that's almost adding a trillion today. Almost every after one and a half month, it's adding a trillion on it. We should try to understand. This brings us to the big question about the fiat currency. Okay, this brings us to the question of the fiat currency. Like, the fiat currency is failing. This is just all going down in simple terms. If you look at the fiat currency and how it's performing, we are looking at an era where we are uncertain where the future is. See, we're having a dead US dollar that cannot be replaced. Okay, that has no real replacement, because we don't trust the Chinese currency. We don't trust we are looking at the dollar as something we trust, but oh no, it's going down in simple terms. If you look at the solution for the US debt and how it's getting implemented, it still has 1,000 questions. Or it will either work or it won't. Because in actual sense, if you ask me for a replacement of the US dollar, there's no political leader will come up and say, this is the actual replacement for the US dollar. Okay? We are in an era where uncertainty is the king. We are in an era where, just look at the gold prices today. The gold yesterday hit around 3,700, and today it's hitting high and going high. So what I'm trying to implement, expect higher prices, expect inflation to be running out of hand, because Powell's gonna be implementing more rate cuts because we are having more two meetings. The one, I think, is on 29th October next month, and in December. So more two rate cuts. And if you think these rate cuts are gonna be low, just look at gold prices. Just look at how gold is rising. By the end of this year, I promise you, by the end of this year, we are likely to close gold at 4,000. We are like either faster than that or higher than that. But the question is why, and who buys gold most? If it's not me and you, that's the big question. If it's not me and you, the real person who's buying gold, that will be the Fed. Sorry, central banks in simple terms. Okay. Central bank. Just look at the big boys. What they're doing in simple terms. Today, if you're looking into macroeconomics, whenever the economy is looking, just look at what commercial banks and central banks are doing. Okay, just look at the movement, how money. Just look at the M1 and M2 supply, how money is getting supplied. Okay, just look. Imagine banks where you are hoping to see fiat currency being hoarded more than gold. When they hoard more gold than the fiat currency, then that. What looms in your head if you see such kind of characters? What do you think that Powell isn't trying to tell you in simple terms? If you think that I'm not saying governments were never made for you or you and me, but sometimes it's better to think for yourself in simple terms. Okay, Yes, the government was meant for you and me, but at a certain percentage, they think they will never come up and let you know. You're getting. I'm not saying like they're not working for you. They're working for me and you in simple terms, but sometimes it's better to use your own brain to understand where this is heading. Okay, we should try to understand. Today, China is dumping more treasury bonds. Foreigners are, yes, they are buyers of treasury bonds of today in the US, and they are more buyers. But the question, are they more buyers than most sellers? Just look at the percentage of sellers and buyers, and compare who's buying more and who's selling more. If you get my point. The US will never stop having. And when we speak about the dollarization, we don't mean that dollarization is going to be coming tomorrow, starting the next day. This is a process. Just look how long that the US dollar has been down. Okay, just look how the US is profiling itself to the global economy. How is it profiling itself? It's actually becoming how should I call it? Isolating itself in simple terms. It's making itself into something like we'll be saying like the FK word. It doesn't give the FK. You get this? Like it doesn't mind about how everybody is. It's all about everything for America. You're getting, the Trump policies. But it's about what I try to implement is one and simple. That where we're heading is a bad lash. Where we're heading, we can only just leave it to God, maybe Allah, maybe in simple terms. But we should try to understand that the era we are looking at the era full of uncertainties, and we are not really sure where we're heading to. Thank you for watching. See you in the next one.